Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about some of the largest banks going under right now, which is going to negatively impact the general stock market and the global economy. If you have any money in stocks, you're going to want to hear both of these stories regarding the macroeconomic uncertainty that we are experiencing right now. We're going to first talk about the Silicon Valley Bank problem, to where there was a bank run where investors are trying to take their money out of the bank, and essentially the bank didn't have enough liquidity to pay back investors. And this particular bank normally is the one that is used to fund many smaller technology companies. We also know that since this happened, this has had somewhat of a chain reaction effect to also negatively affect Signature Bank, which is also experiencing the same or similar problems. The reason why you would want to be aware of this and the latest news updates for these stories is because if more bank runs happen, and if the government doesn't step in to do something quick enough, this could lead into a full-on recession. On top of that, it's going to have other indications of what the Federal Reserve would do in terms of rising interest rates, or maybe not rising interest rates too early because this catastrophe has already happened. This is going to cause the overall stock market to go downwards because it's injecting a lot of fear and uncertainty for people, and hopefully we can stop these banks from going under, whether that be a complete government bailout or some other emergency action from the government. So if you own any stocks, you're going to want to hear this, because this is going to impact the overall stock market, including European stocks and Asian stocks. So let's get right into today's stories. Remember to go and annihilate that like button so you know the macroeconomic factors that are going to determine if the stock market is going to be positive or negative over the next couple of months. So right now, let's start by talking about Silicon Valley Bank, ticker symbol SIVB, which currently trades for $106 per share. Clearly stay away from this company because of everything that's happening around it. Recently, the United States authorities have launched emergency measures to try to save the depositors of this bank. This bank is literally on the verge of triggering a whole full-on financial crisis and a recession in the stock market as well as the overall economy. Regulators right now are trying to give depositors of this bank access to their funds. Because imagine having millions or billions of dollars in a bank, and then that bank starts to go underwater, and then you're locked out of your overall deposits and accounts, so you can't withdraw your money. This is absolutely catastrophic, and that scares other companies to go to their banks and also withdraw their money. And because banks have a rule where they only have to keep around 10% of their liquidity and cash on hand according to their overall deposits that they should have, the bank can't afford to pay back all of these depositors at the same time, which causes the bank to absolutely crash. This then reflects very negatively on the macroeconomic environment, because this could potentially make a lot of companies go out of business, which makes up the backbone of the general economy. So regulators right now are trying to put in emergency fund actions so the government can align something to make these investors able to withdraw their overall deposits. So clearly some risks still remain, but as you'll see later in the video, this has somewhat been resolved. However, the ripple effects of this are catastrophic, being seen all the way over in Asia as well as European stocks. We'll also talk later about Signature Bank from Silicon Valley Bank, which has also started to go underwater because of this fiasco. Currently, right now, the Federal Reserve, which owns the central banks, are trying to beat back inflation so they can get the economy back up and running. However, these very aggressive interest rate hikes and policies to get inflation under control have put pressure on banks across the sector. And that's another reason why Silicon Valley Bank as well as Signature Bank are not doing very well right now. And the problem with this is that these banks are literally some of the most trusted banks for startup companies, which again make up a large portion of the overall economy. This has been a cornerstone bank for many decades for these startups to achieve and receive cheap money. However, the recent bank run, and if you don't know what a bank run is, essentially it's when people start to run to their bank to take out all of their money, and because the bank can't afford to do that because they have those people's money in other types of assets which they can't withdraw immediately, making them not liquid, this causes the bank to completely go under, and it causes people to freak out because they can't access their overall deposits or money within that bank. This causes for extreme fear and uncertainty and doubt within the overall economy, thus causing the overall stock market to completely capsize and crash. And we're on the verge of this right now. And the fear and uncertainty is spreading extremely quickly. Now, the only good thing that's coming out of this right now is that Goldman Sachs analysts are no longer expecting the Federal Reserve to raise interest rates, considering what is happening in the economy with these very crucial banks going underwater and not being able to give back customer deposits. Literally, the collapse of SVB, the Silicon Valley Bank, is the largest bank failure since 2008. And the FDIC only protects and insures deposits of up to $250,000. So SVB has deposits of over $175 billion. Now remember, the FDIC insurance is for each account individually. However, many companies which make up this $175 billion worth of deposits have millions of dollars in this bank. However, as of the recent government announcements, they say that all depositors will be made whole again eventually, meaning that these companies put their liquidity and their cash in SVB will eventually get their money back. Now, this doesn't mean that these companies and banks are being bailed out. And the difference between a bailout and what's happening right now is a bailout would be essentially when the government steps in and totally takes the hit for this bank to where they can remain listed and in business. However, that's not happening. The government is only stepping in to pay back depositors, but these banks regarding Signature Bank as well as Silicon Valley Bank will completely go underwater. So the depositors are being protected by the government, but not the bank. The Silicon Valley Bank also had very prestigious clientele, and their overall balance sheet is permanently damaged. For one reason is that the rising interest rates made the bank want to invest into unliquid assets so they can preserve their overall money. And this was due to the interest rate hikes by the Federal Reserve to get inflation under control, which generally helps the macroeconomic economy in the long term. However, this was the perfect storm because as SVB invested into these longer term assets which they can't pull back and liquidate to pay back their depositors, and then the depositors came knocking at their door wanting their money back, this created the whole problem, which then caused the bank run, which put these two banks essentially out of business. And the shocks of this are being felt all over the world. For instance, over in the United Kingdom, specifically Britain, SVB had a subsidiary which is negatively impacting European markets. However, the Bank of England recently held talks over the weekend to find a solution to this. And one of the solutions is that HSBC announced buying Silicon Valley Bank's subsidiary that's over in the UK. And as of right now, the pound is stronger than the United States dollar, meaning that £1, which is the currency over in Britain, is stronger than the United States dollar because £1 would be equal to $1.21. The subsidiary of Silicon Valley Bank had loans of around £5.5 billion and deposits of around £6.7 billion as of the most recent statistics. So I honestly think this was a good move by the United Kingdom to buy up this subsidiary because it's going to lower the amount of negative impacts that the European economy will experience from this bank going out of business. So the European economy is being kept afloat due to this quick thinking, but the United States economy is being hit hard considering that two major banks, referring to Silicon Valley Bank as well as Signature Bank, have both become underwater. Signature Bank, ticker symbol SBNY, which currently trades for $70, which you should not invest in at all, is experiencing the same sort of problems that Silicon Valley Bank is experiencing right now. The fall of Signature Bank would be the third largest failure in the United States banking history, which happened 2 days after the failure of Silicon Valley Bank. Again, if this scenario continues, it's going to act as dominoes that are set up, and one by one, very important banks will start to go out of business, which would negatively impact the overall economy, causing the stock market to absolutely crash and for the United States to enter into a recession. However, the depositors of both Signature Bank as well as Silicon Valley Bank, again, will be made whole, and none of these losses will be bore or put on any taxpayers. These depositors will be paid back, however, these banks will not be bailed out or kept afloat. Another thing that's happening is that the FDIC established a bridge successor for Signature Bank, to where the depositors of Signature Bank and borrowers will automatically become customers of Bridge Bank, according to the FDIC. So in a similar way of what the United Kingdom is doing, that's sort of what the United States is doing, that is now absorbing all of the depositors and borrowers from Signature Bank. And again, I think this is probably the best move that they could make in this regard. So what does this mean for the long term? It means we're going to see major volatility in the indexes, to where we're going to anticipate that the Dow Jones, the Nasdaq, as well as the S&P 500 will receive negative ripple effects from these developments. And I really hope no other banks start to go out of business, because then the United States economy will start to trend downward. The good news is that for existing banks, if they're strong enough, they could actually absorb some of this and gain new depositors. More good news is that the Federal Reserve, considering the current macroeconomic environment right now, probably will not increase interest rates, because that could lead to more banks going out of business, and we don't want that. So in the short term at least, it means the Federal Reserve won't increase interest rates as of their next meeting, and it means that existing banks, as long as they can stay afloat, could absorb some of this lost business due to these very fundamental banks. And it means that new startups will have to do business with other sorts of financial institutions, which could create new long-term winners in the future. So I would love to hear your thoughts. Remember that the economy right now is extremely risky and dangerous. However, I actually decide to invest during times like these into very safe fundamental companies, like blue chip companies, or even ETFs and mutual funds, which spread out my risk through a multitude of various investments. But I would love to hear your thoughts on this macroeconomic development. Subscribe if you are new, smash the like button for more macroeconomic updates right now, so we can determine where the future of the general stock market is headed. And without further ado, I will see you in the next YT video.